why is the crypto market collapsing right now? And what aren't they telling you that's likely causing all of the bloodshed in the markets? Are the politicians in Wall Street hiding this information from you as they continue to sell their positions off to retail investors like me and you? Is this why Warren Buffett is now sitting on his largest ever war chest full of cash of over $250 billion? The crypto market has been getting absolutely crushed recently as Bitcoin collapsed to a whopping $49,250 for almost a 30% dump off its recent high. XRP dumped to 43 cents off its recent high for a 35% loss. And Ethereum is winner chicken dinner with an entire 40.68% loss off its recent highs. Ethereum has been getting destroyed. Now, the good news for XRP holders is that it's maintaining its dominance relative to the market right now. In layman's terms, that simply means it's a strong asset for the crypto space, and there seems to be far more support and far stronger holders, especially at these levels right here from 43 cents. As you can see, we've bounced multiple times off of this range down to 38 cents. If I pull up a VRVP, you can see the majority of the volume and the support from a multi-year time frame would be right around here at 38 cents to 37 cents. So it's unlikely we're going to see far lower lows than these ranges, at least in the current situation that we're in, considering markets have already been selling off far worse than XRP. Still, with the recent sell-off in all of the economic uncertainty, Japan's economy collapsing, and the world's largest companies in the Magnificent Seven tanking, losing trillions of dollars on their market cap, it can be quite scary to enter markets right now. But no worries, because by the end of this video, I hope to give you clarity about what's going on, how the Fed will likely respond, and a good game plan for investing in risky crypto environments such as this, based on previous market crashes and history. Also, before we begin the video, head on over to bullrunners.com and subscribe by entering your information to learn how to take advantage of this all market solution. So it doesn't really matter if the market is bearish or bullish. Ultimately, when you come here, you're going to be able to discover how to earn more crypto in less than 10 minutes per day by putting your XRP to work for you in this very first play to earn XRP game. So it's really kind of just a way to hedge against risk, if you will, because if your money's not doing anything, right, well, then you might as well put it to work. So with that said, if you're feeling blessed, comment 777, and if you are going to be the richest person in your family tree, smash the subscribe button. Before we dive in, a quick reminder that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptos, carry risks and potential losses. Always do your own research and consult with a licensed financial advisor. We are not licensed financial advisors, and relying on our content for financial decisions is at your own risk. By watching this video, you agree we are not responsible for any losses or damages, and we do not guarantee any specific results or outcomes. Some of the links below may be affiliate links, and we may earn a commission, which actually helps support this channel and helps us to create value-based videos like this. We also hold some positions in the cryptocurrencies that we talk about, but that's only because we do what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that said, let's get into the video. Hello guys, and welcome to the video. In yesterday's video, I did mention a few things that I want to address in this video because I totally forgot to. There's always sometimes so much information, it's hard to get to it all. But in this video, I'm going to try to cover something that I didn't cover yesterday that sits well with today's video and kind of really leans into addressing what's happening in markets right now when you have someone like Bill Ackman, who's very much in the know as a hedge fund manager and multi-billionaire who's made a lot of really good calls in the past, including the top on bonds not too long ago. So Bill Ackman pulls his investment fund IPO after shrinking its size. Now, I just want to address this this for a second and kind of give you my take and what I think he's doing this for. The billionaire investor originally aimed to raise $25 billion in his offering on his fund, basically, before lowering the target to about $2 billion this week. So 9 times out of 10, 10 times out of 10. When you're playing at this level, more money is better, right? Why would I take fees on $2 billion when I could take fees on $25 billion? Now, they're going to try and spin it any which way and say, well, we just thought it'd be better for the investors. And, we thought, well, based on what's happening right now and this and that I just want to make sure that we're doing our best job possible. But in reality, something else is really going on. Bill Ackman pressed pause on the initial public offering of a new fund aimed at everyday investors after a lack of investor demand forced him to dramatically shrink his fundraising target. Now, this isn't exactly how he put it. He didn't say lack of investor demand per se. He had a different word. Ackman originally aimed to raise around $25 billion in the offering, hoping to capitalize on his social media celebrity before lowering the target to around $2 billion this week. And in the process, he asked the shareholders, a mix of institutions and high net worth individuals, to participate in the IPO, the sooner the better, to improve the strength. But him lowering the target is basically a nice way to save face and not look totally stupid. The reality is the market doesn't want to put money into things that could potentially be risky right now. And so that's a very strong indicator that if he's lowering his target, he knows he's not going to get it, probably because the market doesn't look too healthy. So why would all of these major institutional players and high net worth individuals want to hand their money over only for it to be dumped into the markets and potentially sustain major losses when they could sit in cash? The next thing I want to address is the situation with Bitcoin. As of yesterday, I actually was on the video, and I remember specifically targeting about 63,000 based on open interest and just kind of based on this entire trend, that it was possible with a few longs being opened that we could hit that 63,000 range before potentially moving back down to the 58,000 range, and that was my target. And if you watch the video from yesterday, you will see that that is the case. I said it's likely that we'll hit this target at some point in time. I even removed off the table a $53,000 play in the short term, thinking that probably would come later. I didn't know that we would get such a nasty sell-off today, and there were a few major reasons this sell-off occurred, which we're going to address in this video. I just did not expect things to escalate so fast. So, moral of the story is never say never, because you may not expect something to happen and 9 times out of 10 it won't. But if I would have put a long position on there, which I'm grateful I didn't, I would have got absolutely wrecked. So the next lesson is trade with the trend. The trend is your friend. If the trend is down and things look down, then chances are it's going to continue going down. So on any little pressure to the the buy side, if you will, sell to the short side. If I head on over to CoinGlass, you can see that over the last 24 hours now, we're sitting at $1.14 billion of liquidation. So in these types of situations, it's probably best to stay away from leverage unless you're really experienced or know what you're doing, because then you get liquidated and you lose all of your money. And the worst thing you want to do, right, in a bear market or in a market where we're seeing a bit of a correction, if that's all this is, to be caught without cash, right, to be caught with your pants down. And markets are still relatively short. As you can see here, we're climbing into that $3 billion range from a 7-day time frame on Bitcoin, which means a lot of the leverage has left the system. People probably pulled their position out completely, whether it was a little bit of a loss, a big loss for them. Ultimately, they didn't want to get liquidated, but we're still leaning heavy to the short side. Whereas on the long side over here, right, we're sitting at about $499 million of longs that would be liquidated if the price hits $43,000. So far more people are confident that the market's going to continue to dump. That said, there is also far less leverage in the system, and that's typically healthy and indicative of a reset. It's really untimely right now that this is all happening on a Sunday, right? When we haven't seen the markets open tomorrow. If this happened at any other time, at least through the week, we could watch how the market responds. And so if I were to enter any long positions right now because of all of those liquidations, which normally I might be tempted to, I think I would sit it out through the very first day of the trading week, which is Monday. And that's because, we could see a lot more blood in the markets on the very first opening candle and hour. So I want to be more cautious, even though in these types of situations, I might want to take advantage of that opportunity. Now, the S&P is something that we've covered for a while, but it's a good indicator of the health or the relative health of the market, right, in the US. So that said, something that we consistently pointed out on this channel for actually over the last, I would say, 3 weeks to a month, is the fact that we kept seeing a lot of these major sell days, right? I mean, just look at the amount of sell volume. We're talking 25 trillion on that day. We're talking another 20 trillion on this day. So this is what is indicative of distribution. Now, these players knew that we were overvalued in terms of the market. They're probably looking at things like the Warren Buffett indicator. They're probably looking at the relative weakness in other areas or sectors of the market, the yield curve inversion, higher interest rates, less spending, you name it, right? Across the board, they were distributing, not knowing whether the market would continue climbing up. But then they used these opportunities to continue distributing. And guess what? As they're distributing or selling their positions, the volume continues to climb to the upside in terms of the sell volume. So now we're starting to get these gaps down. We got a gap down here. We got another gap down here. We got another gap down here where the support was taken out. And then we see another confluence in terms of the price and a breakdown is the fact that now we have a 50 EMA where the actual index broke down below it. But this time it doesn't look like we're potentially going to get another situation that looks like this. We might actually go a bit lower. And then you even have major tech companies, in this case we're talking chips and semiconductors, from Intel dumping from $51 down to $20 for a 60% collapse. Now this is something that you would typically see in a bear market. So you're sitting here wondering, it's like, okay, are we in a bear market? I mean, we're seeing some major companies lose insane amounts of market cap and value. And to lighten the mood a bit, there was this funny post on X basically stating, have you even asked yourself how bad it really is? It's the Intel CEO quoting the Bible levels of bad. And here you can actually go to his personal Twitter, Pat Gelsinger, who does, consider himself a Christian. So in all fairness, he said, let your eyes look straight ahead. Fix your gaze directly before you. Give careful thought to the paths of your feet and be steadfast in all of your ways, quoting Proverbs 4:25 through 26. But I do find it kind of funny how this is indicative of a recession, if you will. Now, many people attribute this current crash or collapse in crypto to Japan and their index posting its biggest one-day fall since 1987. And here is a chart of the collapse. And off its highs, you can see that we are down 28%. So Japan is really struggling. This created for a situation where there were rumors that the Fed and Jerome Powell were going to have an emergency meeting around cutting rates, but that remains to be seen. Now, one theory surrounding why this is happening in Japan that I found to be very educational came from the rookie consultant. And here's what she said. My 2 cents. Japan has been stuck in stagflation for the past 40 years with interest rates near zero. This low rate environment allowed global traders, particularly US hedge funds, to borrow cheaply in the yen and invest in high risk assets like NASDAQ stocks. It makes sense, right? If I can get access to capital far cheaper in a different country and then use that capital to go buy stocks in the US that are typically, carry more risk but more reward, then why wouldn't I? However, on Thursday, the Bank of Japan raised interest rates by 25 basis points or 25% for the first time in 4 decades, signaling more hikes ahead. So finally, Japan, catches a break. Their stock market is doing well, right? And then what happens? They're like, okay, we can finally breathe. Let's increase interest rates a bit. And this hawkish shift triggered panic among traders reliant on 0% yen loans, prompting a massive sell-off. So, these markets are absolutely skittish right now. And this has, a lot of investors concerned that maybe this is just one of the things that's going to happen in a series of other things that are going to lead to far more fear and far more blood. The yen's appreciation versus the USD by 10% in a month further squeezed the profits of Japan's export-driven companies, compelling foreign investors to dump Japanese stocks, leading to a 12% market decline, and Nintendo was even down 17% today. Now, it's widely understood that there's always unrest in the Middle East, particularly through the Palestinian state and Israel and now Iran, as they just attacked a major leader under Hezbollah. But this tweet from Patrick Bet-David kind of sums things up. Tomorrow opening of the market will reveal a ton. Few strange events taking place causing concern among investors. Rumors of an underground bunker in Jerusalem where senior leaders can remain for an extended period of time during a war has been prepared by the Shin Bet Security Service and is fully operational. The Walla news site reported on Sunday amid fears of attacks on Israel from Hezbollah and Iran. The bunker, reportedly built 20 years ago, can sustain hits from a range of an existing weaponry, has command and control capabilities, and is connected to the Defense Ministry headquarters in Tel Aviv, the report said. To further go on, he says, shit's about to hit the fan, a possible World War III is imminent, and America may be forced to get involved with the Iran-Israel if Hezbollah attacks. And in this article from the Wall Street Journal, Iranian leaders have vowed to retaliate again after we killed one of their leaders. On Sunday, or not we, but Israel. On Saturday, Iran told Arab diplomats that it didn't care if the response triggered a war, according to people familiar with the conversations. The U.S. asked European and other partner governments to convey a message to Iran not to escalate, warning that any significant strike would draw a response. What does that mean? That means a potential World War III. And the reality is we are supposedly good partners with Israel. We are their allies. And so when you look at Benjamin Netanyahu meeting with Congress recently, here's what he had to say.
For those who believe that Iran threatens the Jewish state, but not the Jewish people, listen to Hassan Nasrallah, the leader of Hezbollah, Iran's chief terrorist proxy. He said, if all the Jews gather in Israel, it will save us the trouble of chasing them down around the world. But Iran's regime is not merely a Jewish problem, any more than the Nazi regime was merely a Jewish problem. The 6 million Jews murdered by the Nazis were but a fraction of the 60 million people killed in World War II. So too, Iran's regime poses a grave threat, not only to Israel, but also to the peace of the entire world. To understand just how dangerous Iran would be with nuclear weapons, we must fully understand the nature of the regime.
Now, the U.S. eats it up. They love this relationship with Israel. And to be honest, I don't really fully understand. I don't really swing any direction, so I don't know how you feel about it as a viewer. But here's what I do know. War is terrible. War is evil. And ultimately, these nations do want to destroy each other. And it seems that the U.S. is totally on board. Look at how our leaders applaud him as he walks into the room. It seems that Netanyahu and Israel are a proxy for war throughout the Middle East and to finally take down one of the last regimes standing, which would be Iran, because they've basically conquered or destabilized all of the other countries in the region. And Netanyahu himself said Israel is now in a multi-front war against the Iranian axis of evil. So if there is any retaliation, it seems that the US will also retaliate and get involved in this war. Now, why do we think that's potentially going to happen? Well, look at this. A gentleman by the name of Ben Geller on Twitter posted the pizza meter is off the charts and the bars in DC are empty near the Pentagon. Now, for those of you guys who are not in the US or need a refresher, the Pentagon is the headquarters building of the United States Department of Defense just outside of DC in Arlington County, Virginia. This is basically the building where all of the suits sign the checks, money goes missing, major decisions are made that can destabilize nations all around the world. It's kind of an important building, but it's more so about the people working inside of this area and what they do after work. So what this gentleman found was that in this area, there are certain bars on Fridays that are typically busy based on Google information. Now, what's interesting, if you go on Google Maps, you'll see that, any one road might be red or yellow if you're driving, and like it's either very busy compared to usual on those days at those times, or it's less busy than usual. What he found was that the Little Gay Pub, Trade, Freddy's Beach Bar, Green Lantern, Number 9, Uproar Lounge, all of these places are typically relatively busy on Fridays, especially Little Gay Pub for whatever reason. And then this guy right here, Number 9, for example, actually all of them. But what's interesting is they actually saw far less people than typical. You can see that it's well below average, and this was on Friday night late. So this is an assumption that Pentagon and the people that work in DC are apparently prepping for war. And this guy says, so war is coming, to which he responds, yes, the Pentagon is very busy preparing. And this is actually starting to show up in defense stocks or companies that produce products and then sell those products or weapons to our military. So right here we have Raytheon. And these guys developed such a bad rap over the years under that name that they actually had to rename themselves to RTX Corporation. But as you can see here, while the entire market has been dumping, these guys have actually been pumping. So whoever knows something inside of DC or among the insiders that markets were going to sell off because we have a potential war incoming, well, guess what they also know? They seem to know that RTX or Raytheon is likely going to get a major military contract. The same is actually also true for Lockheed Martin, breaking out from its previous highs at about $500 and one of the only major stocks with this large of a market cap pumping to new highs. So with all of this turmoil in the markets, people are actually starting to predict that we are going to get a 50 basis point rate cut in September. At first, it was 25 basis points for 0.25%. Now we're sitting at half of a percentage point. There is an emergency rate cut today similar to what happened in March 2020 crash, but we don't really know if that's going to happen just yet. There's also been rumors and news that that is unlikely as of right now. So we're kind of somewhere in the middle. Now, here's my personal opinion. If Jerome Powell comes out and cuts rates by 50 basis points, then that's going to signal to the market that things are far worse than we expected because they have access to information that we don't, which would basically send the markets tanking even further. And in the process, as markets continue to collapse, typically those that yield curve inversion will start to climb up, right? Or better yet, the interest rates that you would typically, the yield you would get on bonds and treasuries would start to dump. Now, as all of this comes to a T, what would happen is markets continue to crash. The Fed eventually has to lower interest rates and print trillions of dollars. And the reason they would have to do that is to basically not only save the economy, right, but to save any chances that Kamala Harris would have at running for president. Right now, she is the incumbent, if you will, who is in office, and you can't have a global or a U.S. recession on your hands and then also try to win office. So they're going to have to try to save markets, but it's going to be very hard to save if they don't do one of two things. Either they start cutting interest rates fast and now, right, and deal with it now, or they do it later. But at the end of the day, the market looks like it's going to go down. And in any or all of these scenarios, some major action is going to have to be taken. That said, David Gokestein on Twitter said this: in the next 2 weeks, Warren Buffett will be back in the market, which I don't really agree. I think it's going to take a bit more than 2 weeks. World War III talk will fade away, and that might be true. Maybe we don't enter a war. Maybe we narrowly avoid it. I don't know, but it doesn't sound like Hezbollah and Iran want for there not to be a war. So we're going to have some really important or smart diplomats doing some peace talks. And the reality is, right now, we don't really have that. We've had a very incompetent president and vice president and cabinet. It sounds like every single place or thing they touch goes to shit, right? We're talking Afghanistan. We're talking Russia and Ukraine. We're talking we've had very little peace or stability even in the U.S. The Fed will hint at cutting rates more than once, and the government will start printing money because Harris can't win an election if the economy goes into a recession. Again, this is something I agree on. I just don't agree on the timing. I don't agree in the order. And so what I personally think will happen is what's currently happening. I think the markets are going to continue dumping a little bit, which is going to present some opportunities. Now, if we start to get talks of peace and these rumors really start to fade away, right, as the market continues to dump, they're going to continue lowering interest rates and then potentially print money to help Harris win an election. But that remains to be seen. I actually think it's probably more likely that we do have some sort of an escalation and a potential war on our hands, considering the information that we just looked at, considering the fact that these defense stock companies are breaking out for new highs. I feel like Washington knows something. I feel like that one really interesting indicator that we looked at surrounding the bars in the Pentagon area being very not busy during those times that they're typically busy signals that they're really busy over there and that the news just hasn't broke yet. But we'll see, tomorrow in the next couple of days what really happens. That said, Bitcoin did break for a new low, whereas XRP did not. XRP actually broke for a new higher low. So even in this type of a situation, like I said, XRP is showing some real strength and strong holders in this range. In situations like this where you see this much volatility, I don't typically like to buy the first day unless I'm day trading. And right now with the level of volatility and uncertainty surrounding tomorrow, I probably won't. So instead what I'll do is I will dollar cost average as we break down, or if we break down into that 38-cent range. And if we get a wick or some sort of a nasty sell-off that brings us back down into that 30-cent range right here, I will be buying as much of the crypto that I possibly can. That would include for XRP. And then in terms of Bitcoin, I would argue it'd be somewhere down in that $43,000 range. So it is possible that over the next day or two, we dump into that range if anything does happen in terms of a black swan event or a new war that we enter. But as things stand, these look like good buying opportunities in these ranges for a move to the upside. And so I will be preparing for that. I would also encourage you to prepare those portfolios by heading on over to bullrunners.com because this is basically an all market solution. So it doesn't matter if it's a bull market or a bear market. If you are sitting on any USDC or XRP, right, this is a way to earn on that. So you can put it to work for you. You don't have to sit on it and have it do nothing. It's kind of like fiat currency at the end of the day, right? Except if something is dumping, you don't want it to be earning nothing for you. But fiat currency is inflationary, and so it's really important that you put your stuff to work for you. But when you head on over to bullrunners.com, you'll be able to discover how to earn more crypto in less than 10 minutes per day with the very first Play to Earn XRP game. So if you learned something in the video, you enjoyed the video, leave us a comment, leave us a like, subscribe to the channel. It helps us out, and I look forward to seeing you in the next video.